Imagine making a trading decision in just 60 seconds. Today, I'm testing a scalping strategy that combines EMA 21, EMA 9, and MACD. Many traders claim it's one of the fastest ways to catch profits, but does it actually work? Or is it just hype? Let's find out. This strategy is based on three very simple but incredibly useful tools: EMA 21, EMA 9, and MACD. What makes this strategy special is that it works on a 1-minute time frame. You might be wondering, is it possible to enter a trade in 60 seconds and make a profit? Yes, it is possible, but only if you know the rules correctly. In this video, I will show you how these three indicators can work together to show you the exact entry and exit positions. So if you are looking for a quick, simple, and profitable strategy, watch this video until the end, because I will tell you some things that few people have told you. Let's start with the tools. EMA, or exponential moving average, is one of the simplest and most widely used indicators. The difference between it and the simple average is that it gives more weight to new prices. That is, if the market changes direction quickly, the EMA will show faster. We use two EMAs in this strategy. One is the EMA 9, which is short-term and shows the current trend. The other is the EMA 21, which is longer-term and shows the overall trend. When the EMA 9 is above the EMA 21, it means the market is bullish in the short term and vice versa. Now let's move on to the MACD. This indicator is a combination of two moving averages that show their difference. When the MACD line is above the signal line, it means the trend is bullish. When it is below, it means the trend is bearish. In addition, the MACD histogram also shows us how strong the trend is. So the EMAs tell us where the trend is, and the MACD confirms whether it is safe to enter or not. This combination allows us to enter only the best positions. You may be wondering why we should choose the 1-minute time frame. The reason is very simple. Scalpers are looking for small and quick profits. For example, you might buy and sell on a 1-minute time frame several times in a single trading hour. This gives you a lot of opportunities. But this time frame has a big problem: a lot of noise. That is, fake moves that can cause you to enter a trade prematurely or make mistakes. This is where EMA and MACD come in handy. When we combine these tools, the percentage of errors is very low. Another advantage of the 1-minute time frame is that you can see the result of the strategy very quickly. You don't have to wait hours for the trade to work. This is great for those who are short on time or like to get results quickly. To get started, just log into a trading platform like TradingView. First, add the EMA indicator to the chart twice. Set 1 to 9 and choose a color for it, for example, yellow. Set 1 to 21 and color it blue to make it easier to distinguish. Next comes the MACD. The default MACD settings are usually 12, 26, and 9, which is perfect for this strategy. Add this indicator to your chart. The bottom of the chart will appear. There is a histogram and two lines on it. We will learn how to read it later. That's it. We have the necessary tools set up. Just a few simple clicks, and we are ready to trade with them. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. The entry rules for this strategy are really simple and straightforward, but if we look a little deeper, there are many small points that can improve the quality of your trades. The main rule is this: to buy, you need to cross EMA 9 from below EMA 21, and at the same time the MACD histogram becomes positive or the MACD line is above the signal line. The opposite is true for selling. That is, EMA 9 must cross EMA 21 from above, and at the same time the MACD enters the negative range. But the most important point is that in the 1-minute time frame, the movements are very fast and full of noise. So if you enter at the moment of the cross, the probability that the signal is fake is high. That is why you should always wait for the current candle to close. This seemingly simple task prevents many losses. The second step is related to the second confirmation. That is, even if the EMA's cross and the MACD signal occur together, it is better to look at the trading volume or the shape of the candle. For example, if the cross occurred in a very weak and small candle, the signal is likely to fail. But if it is accompanied by a strong and powerful candle, its validity is much higher. As for the stop loss, you should always set a logical limit. The best place for a stop loss when buying is a little below EMA 21, because this line is a kind of short-term support. The same goes for selling. It is a little above EMA 21. This method reduces the risk of your trade. For the take profit, you can also use the classic ratios of 1 to 2 or 1 to 3. That is, if you risk $5, your goal should be $10 to $15 in profit. Of course, in scalping, sometimes it is better to exit the trade early and take a small but safe profit, rather than wait for the market to turn around. Another point is that if the EMAs move very close to each other or the MACD has weak fluctuations, it is better not to trade at all. This is usually a sign of a sluggish and lackluster market. The best trades always happen when the market has some volatility and energy. Finally, always remember that no strategy is 100% perfect. So follow the entry rules carefully, but be sure to also follow your money and risk management. This combination will allow your account to grow even if you lose a few trades. Let's say we are on the euro-dollar currency pair. EMA 9 has just crossed above EMA 21. At the same time, the MACD line has crossed the signal line and the histogram has turned green. This means that the conditions are ideal for entering a buy. We place the stop loss just below EMA 21. After a few candles, the price rebounds and we easily take a profit. The opposite is true for selling. This example shows how EMA and MACD together can give accurate and safe positions. Many people think that because scalping is fast and exciting, there is no need for risk management. But the reality is the opposite. In scalping, because the number of trades is high, if you don't have a stop, your account will be empty very quickly. You should always not risk more than 1 to 2% of your capital on a single trade. Even if you are sure, don't forget about the stop loss. Scalping is like sprinting behind everyone else. If you run carelessly, you will fall quickly. Well, friends, this is another 1-minute scalping strategy with EMA 21, EMA 9, and MACD. Now it's your turn to test this strategy on a demo account. Tell me your results in the comments. If you would like me to review other strategies, be sure to write. Don't forget to like and subscribe so that we can continue this educational path together.